Hello, this is Ariella Carmel, and I'm at Calcalist's Mind the Tech conference in New York. I'm joined by Erez Shachar, the managing partner at Qumra Capital. Thank you so much for joining me.
Thank you. Good morning. Great to be here.
So can you start off by telling me a bit about Qumra?
Sure. So Qumra is a late-stage fund focusing on Israeli tech investments. We were actually the first late-stage fund in the Israeli market, established 10 years ago. We manage today about $1 billion under management, and we've invested in 24 companies over the years. We come into companies when they're at around $10 million of sales, and we see ourselves as partners for building companies from 10 to 100. This is the area which we think there is the highest value creation for private companies. And this is an area which Israel was very weak with until a decade ago.
Like scaling up.
Scaling of companies, exactly. I mean, we were very much known for being, a startup nation and setting up great companies, great technologies, getting to product market fit, and then selling the company to the first organization that came through the door. Okay?
Right.
And when we started Qumra, we really believed that there is both motivation and capabilities of entrepreneurial teams to actually scale companies and build large, sustainable companies which will remain Israeli companies and hopefully go public and create a platform that is Israeli, scaled, and we can do that in scale. So meaning that there are many companies like this that we can invest in. And initially it was a tough sell for us to sell to investors, okay? Because there was very little going on in Israel in later stages of investments, but we believe that there is a pent-up demand for this late-stage capital, and the market proved it big time in the last 10 years.
Absolutely. So can you speak a bit about the current situation in terms of late-stage investment and how the ongoing war has impacted that arena?
Sure. So, I think that we are still more affected by the burst of the bubble in the end of 21 than by the war, actually.
Interesting.
And late-stage investments globally have seen a very significant decline since the burst of the bubble. They were the first investments to really suffer from that change in environment at the end of 21, coming into 22. We're seeing this changing now, and we're seeing more and more of the companies that got funded during 2020 and 21 coming back to market today for late-stage investments. It took a while, and it usually takes a while when bubbles burst for private markets to actually get to valuations of public markets. And entrepreneurs and investors and so on are trying to keep valuations at levels that aren't realistic anymore, and were the valuations of 21, and as a result there is a delaying in investments. We're seeing a significant change in the last few months, and more companies in our stages of investments are now coming back to market, and I think coming to terms as well with the new market conditions. In Israel, other than the global slowdown of late-stage investments, we've of course had a very turbulent year in 23 with the judicial overhaul, and then followed by the war starting in October. It definitely didn't help, okay?
So can you tell me about how the main challenges that late-stage startups in Israel are facing at this current moment in comparison to Israeli early-stage startups?
Sure. I think in general, late-stage startups in Israel are more resilient to the current Israeli situation. And I'll explain. When you have Israeli startups or Israeli scale-ups are companies that are global by nature. They're selling 95% of their sales outside of Israel. Most of their employees are usually outside of Israel. And Israel is normally an R&D and product center, while all the go-to-market functions and the market itself is outside of Israel. So the impact on Israeli scale-ups of the current situation in Israel is actually smaller than it is on startups which are pre-sales, okay? Because startups that early stages need to constantly get funding, and it is more challenging to get funding right now with the uncertainty in Israel. And late-stage startups or scale-ups can actually extend their own runway by, reducing costs, continuing to sell into the market at a lower growth rate, and delaying their coming back to market by whatever is needed. And I think that we've seen a lot of that in the last year in Israel.
So to me, it sounds like it's actually a good time to be investing in late-stage startups, and they're actually less vulnerable.
Yeah, no question about it. I think that it's always, when there's scarcity of capital and there's a lot of deal flow, it's always a good time to invest. And the Israeli tech sector currently has a very large number of late-stage startups that are coming back for funding, and there are not as many investors that are investing in late stage in Israel as we've had in 20 and 21. A lot of the large global late stage players are actually much less active in the market right now, generally, and especially in Israel. And now we need to rely on local players like ourselves to fund this next generation of growth investments.
Okay. Well, thank you so much for that conversation, and enjoy the conference.
Thank you very much. Good.